Good morning. It's Jonathan Tacadena here for MPC Markets on Tuesday, the 19th of May, 2026. It looks like a bit of a stall for the stock market rally there as Trump postpones the Iran strike. And NVIDIA results coming up very, very soon. So, that's the main headlines there. So, uh, uh, Jonathan Tacadena here, and I'll just go through the main headlines. So, looks like the here we go. So, looking at the market map, looks like the Mag 7 had a bit of a fall there. Micron over here was one of the biggest fallers there. Mind you, it has had a historic run, and I'll bring up the chart later of Micron, but it has led that bit of a pullback here in some of the stocks here, and you can just see Tesla is the other main red bar there. What I will show you though is that the main sort of driver is the bond market. So bond yields have broken out to new highs, and that's pretty much all over the world. So in the USA, the 10s and 30s have broken out to new highs. In Japan, same thing, 10s and 30s have broken out to new highs. And even here in Australia, they're blaming the budget for this, but basically they've blown out as well on the yield front. So I'll actually bring up those charts right now as I will just share a different screen. So just hold on a second. Share screen. And here we go. That's the charts there. So this is the TLT. So this is the most actively traded bond ETF in the USA. You can just see it gapped down heavy on Friday and continued last night on their Monday. So you can just see that in the USA the bond yields have broken out. I'll actually show it in the yield format. So here we are. So this is in a yield format. So you can just see on the 30s, they broke out on the Friday. Obviously, the market's starting to price in inflation. There's the 10s there. Here's the 10s in the JGBs. Obviously, that actually broke out earlier last week and continued to new highs. And have a look at the 30s. They're over 4% now. So look, if you had asked anyone at the beginning of the year what would happen if the 30-year JGBs hit 4%, and they would have said Armageddon, and here we are. So have we seen Armageddon? Is this something to be worried about? We have seen some caution in the equities market here that that massive rally that we have had has started to stall out here. But it looks like the world still keeps spinning. While conditions have changed and basically the interest rates are higher, it does mean cost of funding is higher. But as I said, the world keeps spinning around, and that's despite a lot to be cautious about. And here in Australia, look here, that's the 10 years. It hasn't broken out new highs, but I have seen headlines that basically the market isn't happy with the proposed budget and some of the that's the higher taxes there. Obviously, there's a lot of kickback or a lot of resistance there from the business owners sort of segment of the market. And you can just see that in the bond market there. So you can just see that the bonds are sort of breaking out here. And I'll just bring up the S&P. So this is in the CFD format. You can just see it did end up fairly flat around that 7,400 level, but you can just see it did touch that 7,500 and it's fallen back. Look, this is the first pullback in a while. Like, this could easily get back to 7,100, and you can just say that the uptrend's still intact, meaning that we haven't seen any new lower lows there. I'll bring up the Nasdaq. You can just see heading up to that 29,500, and it's just pulled back to 29. So we might have to wait for that 30,000 level coming up. I'll just flicker about. So in Australia, our market tailored two different cities. Our XJO here, you can just see that we're going to be under 8,600 today. It did touch 8,500 in the futures overnight. So you can just see our market, has been, miserably underperforming well before the budget, and obviously with the budget coming out last week, and sort of all those negative news for investors, capital gains tax and things like that. Our market is underperforming yet again. And it's a case of, I keep talking about, it's that the widowmaker trade. A lot of people will invest in Australia thinking that you should play catch up to the US, and just with the Australian government pretty much kicking own goals again. Innovation. Why would you start a business here? I actually had a chat with a person in the digital marketing space this morning. Had a coffee, and he's just basically saying, like, he can just see it within his space. Why would you want to start a business, especially now that, especially with technology, a lot of companies are borderless, meaning that they don't have to be domiciled in that one area. So people are starting to move, and we're starting to consider that for ourselves here at MPC as well. Like, it doesn't mean that we're going to start packing up shops straight away, but it is something to consider. Like, why would you, if you have let's just say you have a brand new idea in AI, why would you start it here, in which is pretty much the highest tax domicile in the world, especially from a capital gains tax perspective. There are places with higher income tax, but if you're going to tax capital gains at income tax rates, why would you even bother taking that risk? Just as I posted in LinkedIn, looks like a cushy government job is the way to go going forward. So I'll stop my rant there, but that's it. So in terms of geopolitics, Trump has postponed the next strike on Iran. It looks like the Gulf has asked for 2 or 3 days, if depending on who you believe, and he's called off strikes. And it says here the deal must include no nuclear weapons for Iran. Trump is saying the US military is ready for a full-scale assault at any moment. I haven't actually kept track of the military operations, but it will be interesting to see. I'll check it on later on today, but to see if I do know that a lot of actual bodies have been deployed to the Middle East, and I think they need a certain type of vehicle to get the ground forces in there. So that will be the true show on. As I say, like, don't look at what Trump is saying. Actually, have a look at what are the actions that the military is taking. And I haven't looked at that for the last week or so. Mainly because there hasn't been much action, but it will be something to look out there. So basically, I think we're in that sort of standoff phase where both sides have rejected each other's proposals, and you have to understand that even though it looks like the USA wants wants it to make it look like they want the Straits open, they're getting hit the least with this closure, because obviously Asia is hurting the most, Europe next, and then coming in sort of third place is the USA and the Americas from an energy perspective there. Like, not to say that the USA isn't being affected by this, because obviously prices at the pump aren't just localized. They are paying more for their energy costs over there, and that's actually showing through in inflation, and that's why the bond market has exploded as well. So it's kind of like one of those vicious circles that we're in at the moment. And if you're Iran, there is no incentive for you to actually, because that's actually your only bargaining chip, that keeping that strait closed. And if they were to give it up for what they would see as a loss, or a loss in negotiations, that they'll just keep it closed for us as long as they please. So that's view. So let's just flick through a few other markets while we're here. So obviously Micron was the big loser, so I'll just bring up that chart. There you go. So I did remember, like, we trimmed half at around the 770-ish level. It's trading 690, so a decent fall there. I'll be interested to actually bring up the Kospi chart, because that's the other sort of big beneficiary of this chip move. Because obviously they have Samsung and SK Next as well over there. And sorry if I butchered the pronunciation of that company there. Oh, there you go. So yeah, a bit of a pullback yesterday, but looks like there was a bit of support found as well. So it'll be interesting to see if that follows through today here in the Asia session. While I'm here, let's just bring up the Nikkei. Pretty flat, decent pullback there. Singapore flat. China, oh, that's pulling back as well. Hong Kong pulling back. Hong Kong pulling back. India, yeah, it's not going anywhere. Europe now, FTSE, pretty flat. CAC, well, it's pulled back but bounced off the lows overnight. And the Germans, yeah, pretty flat overall. So, not much to see. So, yeah, it looks like most of the moves have been in the bond markets. And obviously now the stock market has to price in, the higher cost of funding into their equations there. And in terms of risk, Bitcoin, it was looking like it was going to break up above 80,000, but has pulled back now. And Ethereum or ETH, pulling back there as well, back into the range. So not much to see there in crypto. I think the one market which is quite strong is obviously the WTI price. So you can just see it's back near the top end of the range. And as I mentioned, like any dips towards 90 needs to be bought on that, especially while the straits are closed. It looks like we haven't seen immediate signs of energy crisis showing up just yet. Like I filled up my car on the weekend. I use just plain old 91 because I don't I don't drive a performance car. It just lugs the family around, and I remember paying $1.70. So that's actually fairly close to what I was paying well before the crisis. I think the highest I paid was $2.20 at the pump. While I'm here, let's have a look at gold. So gold was looking likely to pop above that 4,800, but now it's pulled back to the 4,600 level. One thing I did notice is that silver. So silver was teasing a move towards 90, and it did fell back, but it looks like it's found some support already in the mid 70s, and looking likely to trade above 80 fairly soon. So I think that's an opportunity in silver. While I'm here, copper as well. So that's the copper chart, broke out to new highs, and that is very, very bullish. So you can just see here, I'll just highlight with that line here. So this was the previous high closes around the 635 levels. So I'm using the spot market here. It broke past that, didn't break. It did break out to new highs, but then it's obviously rejected the 660 level. But then it's tested the previous highs and actually looks like it's finding some support here. So I think that's a trade in itself here. I think copper will find some support here, and obviously that's just a structural supply deficit here. I was listening to some of Rick Rule's podcasts, which I consider one of the best educators and actual investors in the copper market. And I will paraphrase what he was saying, that we've been kind of blessed with copper. Like we found some massive deposits back in the 50s and 60s, and basically the market got lazy because we found those massive deposits, and obviously Olympic Dam being one of them here in Australia. We haven't had to look for new copper deposits, but as those large mega deposits are starting to dwindle down, no one's invested in the copper space to look for the next pieces of supply. And here we are. Look, basically, what you'll see is that the copper prices have to rise because the demand is still there. Because obviously, if we're going to go EVs and if we're going to use AI more, we need copper to actually fuel that growth in that sector. So while that pullback has been sharp in copper, the fact that it's found support at the previous highs tells me that I think there's support here, and any more momentum to the upside, I'm happy to buy that trade. So so let's have a quick look at some of the other While I've got you, let's have a look at GLD. So GDX is the gold miners. Yeah, you can see overall stuck in the range. Like it doesn't look positive at the moment, but I'm happy to buy it here at these levels. GDXJ, same thing. And let's have a look at SIL. Well, I got your similar chart and SILJ. So I think it's what gold and silver are going to do, and I've mentioned this a few times, is that last year gold, I'll actually bring up the spot price in gold to highlight this. There we go, gold. So before I had that massive run, I'll just reset the chart. So gold had a massive run from, say, September up until January. But for about 6 months, he just traded within the range. So it was like 32 to 34, 32 to 34, 32 to 34. The ranges are bigger now, but I think it'll trade anywhere from, say, 44 to 48, 44 to 48, 44 to 48 for about 6 months till that, that next wave of inflation. And the fact that the bonds are broken out, and it will signal a bit of risk off, but I think that inflation trade is in play, and I do think that gold is a decent store of value and will be an inflation hedge. But at the moment, it's trading like a risk on, risk off asset. Doesn't make a whole lot of fundamental sense, but that's what it's showing at the moment. So it might get to the bottom end of the range, but anytime it gets towards 4,400, I think that's a good buying area, and you probably get some gold miners at good prices if it does get to that level. And the one other trade that I have been keeping an eye on is lithium. There you go, some more lows there. So I do know that there are some holders within some PLS. You can just see that's pulled back. Min Resources, that's pulled back as well. And Liontown. So I will say this about the lithium runs. This is probably the fourth lithium boom that I've been in, fourth or fifth, like lost count. And I did talk about that, that while they were making new highs, that maybe rare earths could be the next sort of segment that has popped in. But the thing is, the rare earths didn't run this time. I'll actually bring up Linus. I haven't looked at that chart in a while. There you go. So Linus didn't make new highs. It's looking positive there. So maybe 18 is the new support level on Linus. But in previous lithium booms, we had lithium boom, then I saw graphite boom, and then I saw some rare earths boom. Cobalt ran at the same time. I'm not seeing the same sort of pattern within the sort of the secondary battery metals tech, and it hasn't followed the lithium price. So I have a funny feeling that that could be a bit of a top in the lithium price, and I suggest managing the risk to the downside from here. Like if you do have some positions, start to tighten those stops, and don't let any sort of profits run away. And then so with that, the market's about to open here. So I'll just bring up the chart of the XJO. So you can just see this is the cash chart. So more new lows yesterday. Obviously, with the US being flat yesterday, and a lot of the commodities pulling back, I think it'll be another negative day. And obviously, keep an eye on the banks because obviously with the new rules in investment properties, I did see that investors are seeing that their borrowing capacity has been cut significantly. A couple of banks mentioned that yesterday, and so we could see some a bit of a soft patch in our property market for a while. And that will translate into softer bank prices as well. So with that, I will sign off. Hopefully you got some value out of that. And Jonathan Tacadena signing off for MPC Markets. Thank you for listening.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.